Hello, and welcome to another session of the Emergence Global Conference. I'm Rhythm Gupta, media anchor at Wholesale Investor, and I'm excited to be your host for today's keynote session on the topic of the distinctive value of emerging fund managers. Our featured speakers today are from AfterWork Ventures, a community-powered venture capital fund that specializes in early-stage tech and tech-enabled companies. With a $20 million fund launched in 2021, AfterWork has already made 24 investments alongside top local and global funds, including Square Peg Capital, Blackbird Ventures, Axel, and Y Combinator. During today's session, the AfterWork team will share their unique approach to venture capital, exploring how emerging fund managers are distinctly positioned to deliver above benchmark returns, and they'll be giving an exclusive preview of their next generation of funds. Joining us today from AfterWork Ventures are Jesse Wu and Adrian Peterson. Jesse is an investment principal at AfterWork Ventures, and Adrian is the co-founder of the company. Together, they'll be taking us through their presentation. Well, without further ado, let's hand over to Jesse and Adrian for what promises to be an insightful and informative keynote session.
Hey, I'm Adrian Peterson, and I'm a co-founder at AfterWork Ventures.
And I'm Jesse Wu, and I'm an incoming investment partner at AfterWork Ventures.
And we are an emerging fund focused on pre-seed and seed investing in Australia and New Zealand. Today, we're excited to share the journey we've been on and some of the observations we've made while carving out a competitive edge as a new entrant in a competitive market. Before founding AfterWork Ventures, I started my career in postgraduate research in mathematics and physics. In 2016, I decided to drop out and found VeriVote, a blockchain-based electronic voting system. Although it wasn't successful, I learned a lot and gained empathy for the founder journey. I then entered management consulting in 2017 at Bain & Company, but I quickly learned that I got way more energy working with early stage companies rather than large corporates. This led me to begin angel investing $5,000 to $10,000 at a time in 2017, which takes us to the start of the AfterWork Ventures story. From 2017 until 2019, AfterWork Ventures started as a side hustle for like-minded angel investors to share deal flow and due diligence at 6 p.m. on Sunday nights. We operated with an open door policy where founders, operators, and investors would join our Sunday night calls to share interesting perspectives on companies they were looking at. By 2019, the Sunday night calls grew to 20 people who together built confidence to become the first investors in a $1 million proof of concept fund we as the co-founders put together. We invested this over the next 2 years, eventually building enough of a track record and differentiation to professionalize and raise a $20 million fund. We are extremely proud of what we've achieved since then. From our angel track record, we have invested in 13 companies. 2 have reached liquidity and 2 are worth over $500 million. Our proof of concept fund has invested in 28 companies and has a multiple on invested capital of 2x. And our 2021 fund has invested in 25 companies, and we are beginning to see early signs of breakout success across the portfolio. Our mandate as a fund is to invest in early stage tech-enabled businesses, and we need to believe that each investment we make has the potential to individually return the fund one or many times over. When we say tech-enabled businesses, we mean a company that may be inventing new technologies or may simply be incorporating the latest technologies in a new model to deliver a 10x improvement in the status quo for their customers. Pre-seed and seed stage opportunities represent the greatest upside potential, but also carry the most risk. We manage this risk by building portfolios of more than 20 companies diversified across different areas of the economy. When I say each investment we make needs to have the potential to individually return the fund, that means we need to see a path for returning $30 million from that individual investment at liquidity, even if we were to invest $500,000 at the pre-seed stage. When it comes to the individual companies we invest in, we will typically spend 4 to 8 weeks in diligence and evaluate the team and company across the investment principles on this page. First and foremost, because we are only interested in investing in businesses that have the potential to return the fund, we evaluate how much customer demand there could be for the proposition. We don't simply take our guidance from the current size of a given market. We challenge ourselves to imagine how many people have the relevant problem, at what frequency, and how much they'd be willing to pay for a solution. Over several meetings with the founding team, we assess the team's unique insights, acuity of thinking on multiple dimensions of their product and business, and evaluate whether they are uniquely positioned to execute on the idea that they are pitching. Through our community and network, we are usually able to find trustworthy and accurate references on the founders. We assess the product, whether it's live or not, evaluating how well it does the job to be done, whether it is easy for customers to understand and use, and whether it has built-in network effects and shareability. We like to spend time speaking to the customer to develop an understanding of who they are, what kind of problems they face, and the frequency and acuteness of those problems. We also dissect the go-to-market motion required to acquire users and convert them into paying customers. We also only back companies that can create momentum with limited resources. We look for teams that can produce results with limited access to capital, rather than those that make excuses. We've invested in 66 companies since 2017, and I think the best way to bring to life what we look for and what success looks like is with 3 examples. Leica is a pet wellness company helping pets to live their best lives. Leica's first product is human-grade, lightly cooked dog food sold directly to consumers and delivered on a subscription basis. We first invested in Leica in December 2020 when they had 4,000 subscriptions and less than 5 million in ARR. In the last 2 years, they have grown to over 40 million in annual recurring revenue. They have over 20,000 active subscriptions, but we believe there is still significant upside left on the table as they're only serving 0.2% of dogs and cats in Australia. Since this initial investment, they've raised a $25 million Series B and a $20 million Series B plus, led by Stepstone Group, and we have participated in both of these investment rounds through special purpose vehicles. Prop Hero is an AI-enabled property investment platform that replaces gut feel with data. Prop Hero makes property investments more profitable while also making the process simpler and more transparent. We initially invested pre-seed when they had generated in total $60,000 in revenue. In the final quarter of 2022, they had grown quarter-on-quarter revenue 140% through to $800,000 for that quarter. Again, since our initial investment, they've raised an additional $8 million seed round led by Fifth Wall, the largest prop tech fund focused in Europe. We also participated in this round. The third and final company on this page is Clickit, who are building the franchise of the future in a platform where kitchens connect to creators on the internet to create culinary concepts for consumers everywhere. We were the first fund to commit to an investment in Clickit before they had a product or even before they had any revenue or even a product. In the last 18 months, they've launched in 6 geographies across Southeast Asia. The software is being used in 300 locations, and they've grown to 3.5 million in GMV in February 2023. They have also raised a subsequent $6 million round led by the global investors Wavemaker Ventures, and we also participated. Now I'm going to pass over to Jesse, who will talk through what we're excited by at the moment and how we're building an investment engine that can reliably capture the best opportunities in Australia.
Hi, I'm Jessie. I'm an incoming investment partner at AfterWork Ventures. I joined AfterWork as a community member back when it was those Sunday night Zoom calls and built conviction to join AfterWork as its first employee in March 2021 when we launched our professional fund. Previously, I was an investor at NAB Ventures, the 200 million corporate venture arm of the National Australia Bank. So, why is AfterWork excited to be building exposure to early stage tech companies in 2021? And why do we believe that early stage venture capital has a place in all well-balanced portfolios? If we think about generational tech companies, those that are worth billions or even trillions of dollars, that are household names and deeply embedded in our everyday lives, we observe that nearly all of them took advantage of a platform shift. A platform shift is a significant change in the underlying technology that supports a given industry. They often involve the introduction of a new platform that transforms how people interact with products or services. Some examples from the last 2 decades were the internet, cloud, mobile, and social. The internet unlocked business models such as e-commerce, online information directories, and online advertising. The widespread adoption of mobile devices enabled companies like Uber, Tinder, and Instagram that took advantage of everyone's continual access to a mobile device, while cloud computing and much more affordable data storage ushered in companies such as Dropbox and other kinds of software as a service companies and online collaboration tools such as Canva. Today, we're observing several platform shifts gain momentum. We believe each of these have the potential to be as transformational, if not more so, than the ones we saw over the last 2 decades. Just as examples, artificial intelligence could enable the automation of many tasks, the generation of content at scale, and deep personalization of outputs. Augmented reality and virtual reality could enable new ways for individuals and businesses to interact and collaborate in virtual environments. Blockchain and Web3 mechanisms could become the building blocks of new models of trust, transparency, and peer-to-peer transactions and information sharing. While connected devices, including wearables, could enable connectivity between devices, machines, and systems, which change the way we interact with not only our environment, but our own bodies. While we're not saying we'll be exclusively investing in these thematics, as Adrian outlined earlier, our strategy will still be to back the most exceptional founders and forward-thinking teams with unique insights in how they can leverage one or more of these emerging technologies to solve a salient customer problem 10 times better than how it's being solved today. But by constructing a portfolio that is diversified across multiple of these thematics, we're aiming to create exposure to the transformational potential of multiple platform shifts without being exposed to timing risk inherent in the maturation and widespread adoption of any one of these transformational technologies. So it's almost incontrovertible that incredibly valuable tech companies will be built over the next decade. Do we have conviction that some of these will originate from Australia and deliver significant value to local investors? Absolutely. We have conviction that Australia will continue to punch above its weight, in large part because the critical ingredients of a successful tech ecosystem have now come into its own. Firstly, a generation of successful local and multinational tech companies have trained a batch of talented operators who now have experience scaling a function within a high-growth tech company. Where a decade ago, tech companies' ability to scale was hamstrung by their ability to find talent that was able to help turbocharge their growth, now there is enough experience in the ecosystem for companies to step on the accelerator as they scale. This benefits early-stage investors if companies are able to put capital to work quickly and drive results. Secondly, startups need access to a range of funding sources across stages. There are now numerous providers of venture capital, from angel syndicates through to late-stage pre-IPO funds. In 2022, $7.4 billion of venture capital was deployed across 700 deals. The availability of significant capital at the later stages allows startups to continue to access growth funding to further entrench their advantage and deepen their competitive moat, increasing the probability of outsized outcomes for their early-stage investors. Thirdly, infrastructure includes accelerators, incubators, events, communities, co-working spaces, mentorship, and investment from ecosystem partners. Locally, there is now a plethora of organizations that provide support through mentorship, knowledge sharing, and resources. These enabling infrastructure nurture entrepreneurial ambition, encouraging founders to get started and providing guidance through their first steps. This increases the number of credible opportunities for us to take part in. The government is also taking technology's role in our national GDP seriously. There are now a raft of initiatives to support the tech sector, including tax concessions for early-stage VC funds. ESVC LP and ESIC tax concessions allow fund managers like us to extend a tax-effective product to our LPs. So, we believe that valuable and generationally important companies will be built in Australia, and we are doing everything in our power to make sure we invest in them right at the very beginning. As emerging fund managers, we don't take our ability to capture this opportunity in front of us for granted. So coming into a crowded landscape populated by funds that have been investing for over a decade, we knew we had to develop and constantly reinforce unique sources of competitive advantage. Our unique differentiator is our community-powered approach to venture capital. AfterWork has built emotional and financial buy-in from a community of 130 founders, operators, and investors. Some of them joined us when AfterWork was a motley crew of angel investors dialing into a Zoom call on a Sunday night, while others are more recent additions. They hail from the region's best startups, scale-ups, multinational tech companies, and other investment funds, including Canva, Airwallex, Google, Tesla, Square Peg Capital, and Bain Capital Ventures. The quality of members' engagement with the AfterWork platform is significantly higher than other groups they may be part of. This is due to community members having financial exposure to AfterWork's success, the strong relationships we've helped to nurture between community members, and the infrastructure that makes it simple for community members to get involved and contribute. To make it really practical, here is how the community animates the VC flywheel for us. First is sourcing. Community members are deeply embedded in the startup ecosystem and bring us proprietary, pre-qualified deal flow from their own networks. Frequently, these are exceptional operators who aren't raising on the open market. Second is selecting. The community represents a diversity of perspectives that is sorely missing from most investment teams and committees. These industry experts help us to accelerate to a robust understanding of the attractiveness of given opportunity spaces and identify best-in-category players in each. Functional experts are able to dissect different dimensions of a business, from the product to the go-to-market to the people and culture. Together, our community is able to drill into issues at the heart of investment decisions, quickly and with greater acuity than any individual investor can. Lastly, is supporting the companies we invest in. Early stage startups, even those led by highly credentialed and visionary teams, are fragile. Founders are spread thin across functions that may be unfamiliar to them. AfterWork Ventures connects early stage startup founders to top tier operators who can provide both high level guidance and in the weeds support, and in doing so, give startups a better chance of success. All in all, in pooling our diverse skills, functional knowledge, and networks, the community allows us to punch well above our weight in the quality of our deal flow, the incisiveness of our due diligence, and the breadth and depth of support we provide to our portfolio companies. We're really pleased that our strategy is resonating. In a recent VC leaderboard, which took feedback from 1,000 portfolio company founders, we were ranked 4th most preferred investor in Australia. To make it really real, let's overlay our community story onto some of the case studies you heard from Adrian earlier. In Leica's case, Adrian knew Anna and Gigi, the CEO and COO of Leica, from his time as a consultant at Bain. AfterWork had the opportunity to get to know Anna and Gigi in early 2021 and invest a small check from our proof of concept fund. After our investment, Anna and Gigi joined the community and quickly became super contributors in their own right. Gigi brought deep insights on operations, supply chain, and logistics to bear on deals, while Anna generously gave her time to help other direct-to-consumer companies through their own growing pains. And at the same time, our community leaned in to help Leica. Our community members advised on scaling their performance and brand marketing budgets 3x. They helped to interview Leica's CTO and CMO candidates, and they referred key hires. In fact, AfterWork community members have since joined the Leica pack. In Clickit's case, we were introduced to Chris through a community member before Clickit was even Clickit. At the time, Chris was building a dark kitchen in the Gold Coast called Shadow Chef. We got to know Chris over several months and tracked the evolution of his idea. Several of our community members also knew Chris from early days at Uber and were able to testify to his visionary streak and his strong execution chops. We were the first fund to gain conviction to back Chris in at pre-seed. Chris is a non-technical founder, so since our investment, community members have leaned in to advise pivotal technical decisions. We've also provided support in PR, comms, and personal branding for Chris's team. And lastly, we've referred advisors who've gone on to join the Clickit team.
To wrap things up, we have three main priorities for the rest of the year. We will continue to invest from our 2021 core fund through the remainder of the year before we begin to invest from our next family of funds. We aim to raise a $30 million 2023 core fund to continue to invest in pre-seed and seed opportunities. We need to have this fund up and running by the end of the year to be able to continue to make investments in new companies. At the same time, we aim to raise a follow-on fund to invest in the later stage rounds of the companies that are emerging as winners across our portfolio. To date, we have taken super pro rata rights through special purpose vehicles, but we hope to build the ability to continue to build ownership in our breakout companies as we have been capital constrained relative to their growth. In terms of timing, we are working with family offices to play a cornerstone role in these funds. If you register interest via the type form Emergence will share, we will be able to share some more information.
Thanks for tuning in, everyone. And if you have any questions for us or would like to connect, feel free to email us. Our emails are on this page, or to connect with us on LinkedIn. Thanks for the opportunity.
Thank you.
Thank you, Jesse and Adrian, for that fascinating presentation on the distinctive value of emerging fund managers. Your insights into the venture capital industry were truly eye-opening, and I'm sure our audience will have a lot to take away from this session. As we come to the end of this keynote session, I want to remind everyone that the Emergence Conference is just around the corner. We will be hosting the conference in Sydney on the 23rd and 24th of March and in London on the 31st of March. It's an excellent opportunity to connect with other industry professionals and learn more about investing. If you haven't registered yet, I urge you to do so. Our keynote session today was just a small taste of what's in store at the Emergence Conference. We have an exciting lineup of speakers and sessions planned covering topics such as AI, blockchain, fintech, and more. You don't want to miss this event. So once again, thank you to Jesse and Adrian for their excellent presentation. And thank you to everyone who joined us today. I hope to see you all at the event.